Welcome everyone. It's quite a sight this, you realise. You look out and there's a sea of blue things, almost like a blue set of aliens looking out there. It's quite fun actually. Right, 4 amazing panellists. I'm just going to check actually, do we have a roving mic available? Yes we do. So if you get questions at any time, please just stick your hand up in the air. We're bound to run out of time. So if you put your hand up at the beginning or whenever you've got a question, we'll get a roving mic out to you. Please put the mic reasonably close to your mouth because of course everyone's got headsets on, so that's the only way they can hear you. And then people can address your questions. We're going to kick off with my panel introducing themselves. I was going to say ladies first, but I'm sort of sport for choice for once. Start at this end.
Hi, my name's Hannah Regan. I lead on financial policy for the British Retail Consortium. So we represent the largest retailers across the UK.
My name's Andrew Self. I'm a senior policy manager at the Payment Systems Regulator. I oversee all of our work on open banking and trying to move open banking forward to the next phase where we've got open banking being used for far more use cases and aiming towards better competition in retail payments.
Hi, I'm Hayley Viner. I'm Director of Payments at Soper Bank, where we are really looking at leveraging open banking and everything that's changing within the payments industry to drive forward innovative solutions for consumers.
And hi, I'm Jana Reed. I run our bank and strategic partnerships in the industry in TrueLayer. TrueLayer is the open banking third-party provider. We work with the likes of Revolut, Uber or Zopa to deliver the open banking payments.
So, my first question was going to be on the hot topic of VRP. However, we now have a hotter topic than VRP, yes, if you can imagine that. The Guardian newspaper on Sunday or Saturday put out there that future funding has come into the front, basically, for, I believe it's for the new entity, not the existing OBI, the interim entity. And there's I can describe it as a cash call gone out to the market saying, please could you make donations, I think is how they sort of phrased it. I couldn't let the PSR go without asking him to comment on it because bluntly, I think it's the first time ever, I'm at least aware of, that we've had sort of regulators go out with cap in hand saying, will you please give us money for something you don't have to give us money for. So I should actually ask you maybe to comment on that. And feel free the rest of the panel to comment, but I can't get the PSR on stage and not ask him to comment on that, because he ain't going to get away with that one. Go on, sir, because the audience will want to know as well. If anyone's not aware, what's happened is the JROC, which is the Joint Regulatory Oversight Committee that is developing the future entity to follow Open Banking Implementation Authority, has on I think last week, sort of put a cap out there to about 40 companies and said, we need about £2.5 million. Who would like to put some money in the hat? Hint, it's a good idea to help us and support us. And so it's gone out. So over to you, sir, if you want to comment.
Yeah, thanks. So there's not heaps I can say on it at this stage, but I think as JROC, what we want to do is get to a long-term regulatory framework where there is clear funding models in place for the future entity, and if there needs to be any transition arrangements between the current and future entity, to make sure that is funded and on a stable footing. We are currently in an interim period where the CMA order has been implemented by the firms, and we are trying to move open banking forward quickly, but we are doing it in a space where there is not currently detailed legislation and therefore regulatory powers that sit over the top of that. So what we are trying to do is move the conversation forward and say we need to make sure that there is a broad-based funding model for that interim phase. As I won't go into too much.
This is voluntary, correct?
This is voluntary funding. What we are looking for is we are looking for a broader-based funding model for the activities of Open Banking Limited.
Broader-based meaning not
beyond
just the CMA 9.
Beyond those that are set out in the CMA order. We've had some quite positive responses to that, and we've actually had other market participants come to us since we've held that meeting and since some of the news reports looking to get involved in some of those funding activities. So what we want is we want industry to come together. And this is probably a theme of my points that I want to have a conversation about today, is have that grown-up conversation that we're in a world where there is a lot of support for moving open banking forward to the next phase. we need to make sure that we can do that quickly, even if there isn't the legislative arrangements that underpin that. And I think having a grown-up conversation that there are central activities that need to happen and need to move forward and will benefit the whole open banking ecosystem is right that they are asked to contribute to some of those activities.
So the whole ecosystem includes people like Apple producing 1 million calls a month and things, right down to, we've obviously got TrueLayer as a big player and a bank. So we're talking about the whole ecosystem really being asked, I said asked, not mandated, or suggested. I think the regulators are suggesting they contribute, sorry.
So we have gone out to the largest participants in the market, and we're waiting responses from those participants.
I don't know if I have both an AISP and an ASPSP on the stage. I should have bound to have both of them been asked if they'd like to remember this is a voluntary contribution, give away some of their hard-earned cash to fund the future entity.
So I think I can go first. So for PISP, well, obviously regulatory work is hugely beneficial, so we are actively engaged in those funding conversations. I think that's all I can say at the moment.
Okay.
Yeah, I think I can't speak on behalf of Zopa and what we're talking about with regulators or anything, but I think it's a brilliant idea. I think it's something that we should have been doing a while ago. I suppose it would have been nice to have been doing it a little bit earlier rather than rushing through.
And Hannah's just happy that we're not asking the merchants to contribute at this stage for once.
Yeah, I don't have anything to say. I'm pretty happy about this. Yeah, as I've said before, at the moment with cards, merchants seem to brunt all the costs. So for once, merchants aren't being asked, so we're quite happy.
I'll move on, but I had to raise it given that it's probably the hottest topic out there at the moment. So thank you for being at least giving us a response, because I realise not a lot can be said. So my first real question, and remember, you're the audience, I have the easy ones here, you have the hard questions out there, has got to be, I think, on VRP, because we're moving forward. It does sometimes remind me of a snail climbing Mount Everest, but that's another story. It seems to go very slowly. The trial we're having seems to be an interesting trial because there are no commercials around it. So I'm not sure is it an operational trial? It's certainly not a commercial trial. So because we still haven't sorted out the commercial side of it. So I'm just wondering how things are moving forward on this, because we need, many merchants I talk to, especially around their loyal customer base, where they see the ability to do VRP once. We all talk about that Uber experience when you check out. You get out the Uber, you've paid. We all want that Uber experience on checkouts. Commercial VRP has the potential to deliver a true Uber checkout. I go to Tesco, I've done my shopping, I hit pay, that's it. It's done. I don't need anything else from me because they've got everything they need from me to sort out the money. Where are we going to on this? Because it just seems to be going very slowly.
Do you want me to come in there first, David?
All right, and then I'll give it to the bank and the PISP, yeah.
Okay, so it's interesting, because I wouldn't agree with the term no commercials. It's a really interesting way of characterising the proposal. So
no one's paying?
I think it's worth clarifying what the proposal is that we've put out there. Firstly, this all stems from really broad-based conversations, both at the strategic working group that was chaired by Brian Zhang, and then the VRP working group, where there was really clear consensus that, if we want to expand VRP into more use cases, we need a dispute process that works, and there are some functional improvements that need to happen. We need a commercial model. We need to get a way of people to participate in this first phase. There was pretty broad consensus about those first two. So we have told industry, led by Pay UK and OBL, to get on with that. We want those frameworks to come forward quickly so that these things can be live by the end of the year. But there was very little consensus on the commercial model and also on how you get parties to participate in this expanded
And it's interesting,
phase.
in fairness, even in Europe with SPA,
Exactly.
they've agreed everything except the commercials over there.
Yeah.
And they can't agree on that.
Yeah. So what we've said is that we think there are economic fundamentals of the market, which mean that there's one element of the commercial model that we think regulatory intervention is required, and that is the pricing relationship between the sending firm and the TPP. We've consulted on a view that sending firms should be able to recover their relevant costs for sending those firms, and in a sort of pragmatic way of moving this forward, what we've suggested is removing those costs from the sending firms. So what we've put forward is a cost recovery model where sending firms will be able to recover their costs.
But the cost does differ for a Barclays of this world, which let's say is X, because I don't want to give away confidential stuff, to a mid-sized bank, which would be about 2X, to a fintech with a prepaid card, but it's still a transactional account, which is probably going to be paying 4X for the same transaction. And those numbers of 1, 2, and 4 are actually pretty close to I know what the numbers are. They're a fintech, a startup fintech is paying 4 times. When you say cost recovery, therefore, if you do it at the bottom end, it's killing the people, it's killing all your fintechs. If you do it at the top end, the guys at the bottom end are making huge profits.
So I think that from our perspective, you need to make sure that, well, actually, take a step back. We don't think that regulatory intervention is required throughout the value chain. We think it's just in this element of the value chain. So we think that TPPs and merchants should be able to contract with one another. We think that merchants and receiving banks should be able to contract with one another. At the moment, we think there is only an economic fundamental that means you need to intervene in that part of the market, and we think that sending firms need to be able to recover their relevant costs for that.
But that could mean different people have different relevant costs.
That is not what we've proposed in our consultation, but we are listening to all of the consultation responses we've got in. And I think it's fair to say that there is a very, very broad spread of views and opinions throughout industry on this. I think that we've heard quite loudly from some of the sending firms that they're not necessarily comfortable with the position that we've put out in the consultation. Equally, we've heard from some third-party providers that they'd like to see a smaller pilot and move this forward quickly. So we are really listening to all of those types of input. I just want to say one more thing, is that it's really important that we have that grown-up conversation about the commercial model. We've said for the first phase that we think that cost recovery is the right approach. But we've also said that for later phases where there is more risk and there's more complexity, that different commercial models may be required. And I think it's really important that we have the conversation in that context rather than focusing very specifically on elements of what we've put out there in the public domain, because we are now listening to the consultation responses that we've got in, and we hope to be setting a way forward in sort of June, July time on what the next phase of that work will look like.
I've got to let the ASPSP and PISP come in here then, so your thoughts?
I can answer this, but I'm going to go about it in a little bit of a roundabout way, because let's take a step back and think about what are we trying to do here. We're trying to enable open banking payments as a payment methods for retailers, right? So, and how we're going about it, we're having a phase 1, testing this with the likes of utility and government payments. That is not retail. So are we really solving with this phase 1 for what we're trying to achieve as our North Star? The answer would be no. It's a nice to have. And David, I will come back to the price thing, but I think it's important to lay out what is it that we need to solve before we start talking about the price thing, right? We need to solve for merchants, we need to solve what does this look like? Is this easy to use? Is this secure to use? So what does the payment journey look like? For the banks, we have to solve 2 things. How do they risk manage it? So liability framework. And how do they internally pitch this project which disrupts their cash cow of the interchange? And that is the regulatory push, right? So it's really important, like, are we pushing the right use case? No, we have to start with e-commerce. We have to get there with e-commerce really quickly. Then answer the 3 questions. What's the happy path? What's the unhappy path? And how do we get the banks, how do we give the banks the nudge? And that's how you kind of get this off the ground. And then the pricing is going to be driven by that, right? Because then you'll know, like, what you're building, where is the liability, and you can then argue where is the pricing in the commercials.
I agree with most of that, if I can, sorry.
I like the word most. I just want to ask her which bits she disagrees with, because that's the important bit.
I'm probably heading towards pricing. As a bank of a certain size in industry that,
well, that's what I said,
serves consumers.
My view is you probably are spending 2 times roughly 2 times what the really big guys are. So if they put it
There's
at the
a
bottom
difference.
level, you're going to be killed. And you put it at the top level, you'll still make a little bit of money.
Yeah.
So
Exactly, and I think that the pricing model is definitely something that needs to be focused on. I think that there's definitely space for testing use cases and really seeing what the potential adoption options can look like and how that market uptake could look. My concern is if the pricing isn't right and also the liability framework is something I really agree strongly on. When you
well, I'm
look
going
at
to come back to that in a minute.
I know, but when you look at things like backed with your DDIC sort of indemnity claim framework, without having that defined initially, depending on how broadly you roll out those use cases, if there is something that's not particularly successful and that liability framework isn't established, it could damage the potential uptake of a really strong product that needs to come into the market. So those 2 pieces are my elements of concern at the moment. But
I'll let
I
Hannah come
support
in.
it.
I want to come back to this liability stuff in
Yeah.
a second, because what concerns me slightly is, again, coming back to pricing on that. But we'll come to that in a second.
Yeah.
So, Hannah, as long as merchants don't have to pay us, you're happy. But cost recovery means they're going to have to pay.
Well, yeah, and this is the thing, is that I do think pricing is an interesting topic of conversation, because merchants, yes, although they're not directly involved in that part of the pricing, they essentially, their fear is that whatever happens will kind of come back on them and the costs that they end up paying to take the payments, right? I think, to touch on Jana's point, that is where merchants feel a little bit left behind at this point, is that e-commerce wasn't included in the first phase. And so trying to get merchants to we want to try and get merchants to look at this and to take it up, but they need to know that, yeah, the consumer protections are in place, that the costing's right for them and the commercial's right for them. All of those really fundamental pieces for merchants are not in this first phase. So it's a slightly strange one for us, in that merchants just feel a bit like, oh, okay, then we won't bother with open banking yet, because clearly no one else thinks it's quite ready for us.
And obviously, I am going to come back now to this, that the big issue, and in fact, I'm going to call it the elephant in the room, really, because especially when we look at recently in the newspapers, the huge amounts on scams and frauds and everything else, the new push payment fraud replacement. Although Chris from the PSR did say he in theory agreed with my suggestion that social media companies should pay 20%, he just didn't have the regulatory powers to do it yet. Yeah, hopefully he might get them soon. But is that user liability framework in the, how do we see that moving forward? Because my concern is that you've talked about cost recovery, but that's cost. There is a cost to move the money, to send it. There is also a cost, though, to run some sort of liability framework. And how's that going to be built in? Because once you start adding in a liability framework, you could give it a name. What do you reckon to that? Give it a name, put a liability framework around it, put a set of fees, call them interchange maybe. You've got a scheme, haven't you? So, are we effectively just going to create another scheme then, effectively, which is effectively an open banking scheme?
I'll come in. I mean, I think we're all scared of the word scheme. I don't think the word scheme and the fundamentals of a scheme are what are the issue there. I think it's if you start to replicate the card schemes and the existing schemes on how that affects retailers, that's where the issue lies for us.
So we can have fees for this and fees for that and fees for sending the money.
You're replicating a card scheme rather than creating an open banking scheme.
We've just said a cost recovery model. We're going to recover my costs.
Yeah, you can still have costs, but it just doesn't have to be at the same level, right? You don't have to keep incrementing.
Good idea. They could be double. Excellent. She's heard that. BRC, we can have double the costs. I like that.
I do think, though, you've got, obviously, we're waiting for HM Treasury's vision for whatever will happen for UK payments in the future. MPA being paused, that will obviously be dependent on the outcome of HM Treasury's vision. Would there be a scenario where there's faster payments and open banking in one framework and scheme, as you mentioned there, or is that something that is still not going to move forward? That's a question that's going around in my head. That seems like a solve for some of this stuff for me, but I think time will tell.
Yeah, I think, look, there's going to be, in this world, I mean, there's already a little bit of a scheme around open banking, right? Like you've got the minimum standards of the APIs, which are prescribed. There's a PSR framework around fraud. So you will have some things which will have to be managed centrally. There'll be a rule book, and then you're going to have some things which are not going to be, and they're going to be really left to the market to solve. And we have to find that balance as we grow up, right, as an industry.
So effectively, the creation of let's call it a structure rather than a scheme. After all, they both begin with S. A structure that allows some cost recovery, including some liability and stuff like that, as well as the sending of money, that creates a structure, maybe with a brand name as well, that then will actually finally, I mean, why don't we have a brand name for it? At least we could all know what we're asking customers to spend money on.
Yeah.
I'm very pro a brand name.
So who should be running it then?
Well, that's a topic of conversation. There's a few options, isn't there? But merchants often come and say that a big drawback for them, I mean, the big drawback for them is consumer uptake, right, and consumers using it. And we think that something that's really holding back consumers is that they don't know what it is. So if they go through a checkout process and they see a new open banking provider's name, why would they ever click that option when they could click Visa or MasterCard? So to really get it to take off, we think, a pay by bank or bank pay, whatever you want to brand it, but something that is a little bit descriptive, so it actually helps consumers know what they're actually doing, and B, they see the same logo or whatever it is, so they've used that before, they know on a different checkout they can use that again. We are very, very in favour of that.
So that might get then merchants contributing towards the interim funding pot, eh? What do we think about that then? You've gone out to ask everyone else for some money. If you had a brand name, maybe merchants would contribute to it.
No comment.
No, I think. Look, brand name. I think over time, maybe that's a good idea. I think pay by bank buttons. We've done quite a lot of customer research. If you have a proper descriptor saying like you paying with your bank app, then you combine the trust of the merchant and trust of the bank. Customers are quite happy to proceed with that. I think we are part of those industry discussions, right? Is that something which we have to solve in the day one? I personally am not 100% convinced, but it's definitely something we're looking at as an industry, right?
Can I just add to that? Because I think there's about 3 or 4 core fundamental things I think it's very difficult to disagree with in open banking. It's got to work. It's got to work well, and payments have got to be processed quite quickly.
Yeah.
Consumers need appropriate levels of protection, otherwise merchants aren't going to take it and consumers aren't going to want to use it, or we're going to have pretty significant problems. And we need a commercial model that works, and we need people to participate in it. All of that is going to require people to agree things. That's going to require rules written down somewhere that they agree with. There'll be some obligations put on banks. They'll have to make sure their API availability is at 3 nines or whatever it needs to be. These things are all going to need to be written in rules. Where do they need to sit? Well, realistically, there's 2 bodies at the moment. There's going to need to be some of these rules sat with Open Banking Limited, some of these rules sat with the payment systems operator, Pay UK. And I don't come from a payments background. I come from a regulatory background. And I find that I find it odd that people are worried about the word scheme, because direct debit is a scheme, and people don't bang on my door and tell me that direct debit
But the merchants say the fees are structured slightly differently. I think that's the issue.
But that's the point, right? Is like when we talk about scheme and when we talk about a multilateral agreement that brings people together to set out functional expectations, consumer protections, and those types of things, it doesn't need to look like a card scheme. And the commercial model doesn't need to look like the commercial model of a card scheme.
Yeah.
Faster has a different commercial model. Direct debit has a different commercial model. I think that's where I really want to be having that conversation.
I called it a structure because it just avoids the dirty word there.
But I think important thing here, and I agree, I think we all agree in this panel that these are the things we need to solve. How do we get to them, right? And I think that's a very important question. We're grappling as an industry. Like, do we really want to put all this burden on the regulator to kind of sit there and tell us, or do we want to figure it out and build this up from the grounds up as an industry? Is it even possible? Maybe now that you've signaled you're really serious about this, will the banks be more receptive to compromise on some of the things and get this off the ground? I think that's going to be really important next step and next question. So liability framework, you can build. You can spend 10 years or 15 years building liability frameworks for every edge case. Okay, you can just launch it with accounting for the biggest risks and build it off the ground. The same with pricing, right? I've done pricing negotiations on VRP for the last 2 years, and I would say that has never been the major blocker. that genuinely, it's always the liability and always the where are the banks, how does it work?
Right, we have a question from the audience. The gentleman here, can I have your name and company though first, please, and then your question?
John Kwamina, Accenture. Can you hear me? Yeah. John Kwamina, Accenture. I don't know who came up with the word scheme initially, but it's quite funny. And Americans don't use it. But it's the origin of, well, the early scheme for cards was there for a reason. We just forgot that reason. And I think the important thing with this is that we really look down the road and understand where this is going to evolve and how it's going to evolve and build that into the scheme. So that
the structure, please.
The structure,
like
yes. Because with backs, I'm hoping that that this might be the future for backs, but the backs is something that people haven't really costed in terms of liability framework, what it really means to banks.
I think that was. I don't think there's a response to that. I don't think there's a real response. There's another question there.
Well, I was quite interested in feedback on
Okay.
on going forward with the scheme.
Are we
rules
looking forward enough? I think is the key question.
I'll come back to. Can I come on to that one? Because what we've set out as JROC is we want to build this iteratively. We think that, and this falls back to the SWG work, is that there are use cases that can be unlocked relatively quickly today that don't require really significant, difficult conversations, and we want to get on with those and do those quickly, and that's where the VRP work comes in. When you start unlocking retail use cases, you start introducing a lot of different risk, additional build requirements, and a lot.
I always think the interesting one is on my tax bill. Because if I gave VRP to HMRC, they could just collect my tax once a year without being able to bother to go in and sort it out. No more late payments.
Yeah.
It's a lot easier.
That's in the first phase. These types of use cases, we think could be unlocked relatively quickly. But then we want to learn from that, because as you can see from the conversation around the consultation we've put out, there are very different opinions across the industry as to how you unlock this and how you build it up. So what we're trying to do is have that conversation, learn, get things moving quickly, develop and iterate, which isn't necessarily what you'd normally associate with a group of regulators coming together, but that is what we are trying to do.
If not in the comments, I'll go to the next one.
No, I have one comment. I think it's a good approach, and I think having the first phase is definitely a positive signal. I think what we have to then look at, how do we then unlock the next stage, right? Because that's where the juice is. This is where are the real things we have to be solving for. And I am really all 100% in for not having this sequential, just having this running parallel. Because there are some in e-commerce, there is somebody uses a Bobco Tacos as an example versus a merchant like, I don't know, Uber. These are two different risks you're running on those merchants, right? So even within the large retail space, you would have nuances there.
Yeah. Question over there, please. Name and company. Please hold the mic close to your mouth.
Yeah. Hello, everyone. William Lorenz, fintech consultant with various early stage companies. My question is, this conversation feels deja vu. I've heard it last year and the previous year and the year before that. And the question is, well, if ideal e-com, effectively open banking in the Netherlands, 10, 15 years ago can be done and get scale and has a liability framework under a scheme or whatever you want to call it. What are we doing wrong, and how do we change the record? And how do we do better and quicker in the future?
Can I maybe comment on that one very quickly? Because I looked into this, and I think we shouldn't be too hard on ourselves, right? The payment APIs have been working from about the second half of 2019. So we are in the payment method, running for about 3 to 4 years. Ideal has been around for 19 years and have launched in a completely different space, right? Same with PIGS in Brazil. You had 77%
But
cash,
is the key
cash
difference that we have there a single customer journey that either the regulator or the market has chosen to use, which means the end consumer user, my wife is Dutch, I know my wife can teach her grandmother how to do an ideal payment because she's got the same screens at home here as she has there. But on the other hand, I couldn't teach my my wife how to do an open banking payment because she's got a bank account at Nationwide and I've got a Barclays. It's a totally different customer journey.
Yeah, but it really doesn't differ that much from what you are used to today on the so say for example you do 3DS. Everybody does 3DS with cards, right?
Yeah, but hang on a second. Your 3DS can come through a text message, your app. I've got emails. It comes through multiple different methods.
And then you have different experiences for different banks.
Yeah.
Is it good or bad? I think you can argue. Well, you can argue because you had, for example, when you are in the retail space, right? And Monzo came in and they had completely different experiences in that app. That was a good thing, right? Because
I agree with you. So in other words, what you're saying is great. Having a single customer journey limits innovation.
100%.
Totally
you need
agree.
to solve for like minimum standards. Put the minimum standards in there. 100% on that one. Put the liability framework again. Don't over engineer things. I think in terms of Ideal, I don't think Ideal actually has like buyer protection, for example, right? So they only have fraud and payment protection, which we already have under open banking scheme.
So we're happy to sacrifice, and I raise this to the panel, we're happy to sacrifice, not sacrifice, I would say, mass adoption, PIX and Ideal, because they've got a single customer journey.
No liability there, by the way.
Okay,
PIX or UPI.
Yeah. But an UPI as well. So there's a single customer journey and mass adoption versus in the UK, low, and rest of Europe, low adoption, but great customer experiences or lousy ones depending on who you use.
Right. And I think that was probably where that gentleman's comment was coming from, in that I think we've all been at these conferences and been talking about open banking payments and that for years and years, and the adoption hasn't been as extensive as I think any of us would have liked it to have been. I think some of the changes coming through will hopefully drive it a little bit more. We'll see an uptick, but to the Ghana kind of report outcome, I just don't think we've had a consistent industry view of where we need to get to really help drive that. I'm not saying we need to have one size fits all of what we need to aim for, but that guardrails of what we want to operate within just hasn't really been well thought through.
Well, I mean, when I had the chair of the ECB on stage a few years ago, I did ask him about the regulatory technical standards, of course, which wasn't a technical and wasn't a standard. But apart from that, I said it was an interesting document, and he said, no. The whole purpose was to create a loose framework which everyone could then develop an industry in. And the problem I'm seeing on that is, for you as a merchant, is that we've ended up with everyone doing things differently. So merchants are going, well, at least with a card, everyone knows how to tap. We didn't say to some people, you've got to twizzle your arm and twitch your ear, or you've got to twitch your nose to tap. It's just take your pocket out, tap it.
Yeah, but still,
one process.
It took 15 years to pick up, right? Oh, 13 years, 2007 to 2020 to really.
But we only have one customer journey. Imagine how long it's going to take if we got the 20 customer journeys.
This is where it could get really interesting. Obviously, Apple accessing open banking data. If I can get my phone out, which is not an Apple phone, but show my face and actually pay by bank rather than by my card, that will drive the adoption much faster than anything else, I think, at this point.
Hannah, I haven't let you come in here, because as a retailer...
Yeah. Look, often I do have the view of, are we over-egging this, right? Why has it been able to take off in other countries? Probably because they didn't over-egg the regulation. They just kind of let it run, right? And they just let it saw what happened. I do sometimes veer towards that way, but then the other part of it is the culture of the UK, right? We are so used to, we're used to our cards, and we're very used to being very protected. And partly I kind of blame Martin Lewis, not going to lie. But it means that everyone in this country seems to know that they've got all these protections with cards and expects it with every other payment type that they use now. Right. And I think that's where the issue comes in, that in this country we kind of have to over-egg the regulation a little bit.
So actually, push payment for, go back to my thing to Chris, and he sort of agreed on 20% for the social media works, 10% for the consumer, on the basis, at least if everyone has some skin in the game, they might try and prevent these frauds.
Right. Yeah, I don't disagree with you on anything. But
there you are. See, even more people agree with me and Chris.
It's a difficult balance to get.
It is. I understand that. Yeah. No. I don't know if the PSR has any thoughts around this mandating a single customer journey.
Of thoughts. So I think that one thing that's really interesting is that we've actually done quite a lot of work looking at international comparators. What can we learn from other countries? And it's very difficult to look at one country and go, yes, right, the market structure.
70%, 70 odd percent usage. We don't want that. No, no,
yeah,
no.
But it's more that. So you look at Brazil. Why were they driving towards PIX? Because they wanted to get people away from cash, and it was a huge government drive.
They want to get the income tax. They didn't know anyone was making any money.
Again, you look at India, and again, the government have fronted up and paid for the infrastructure to make this happen and move it forward to drive productivity. And then you look at, say, Ideal or Swish, where these were sort of incumbent systems that stood up and grew as people got far more comfortable with using cards. That there isn't one international comparator we can look at and go, yes, right, okay, we can just cut and paste what they've done because that's going to work in the UK. But what we've certainly been trying to do is learn what people have done and why it's worked. And that single user experience, I think, is a really good example, right? So OBL, one of the really big things they've done is the consumer experience guidelines, right? And those have been quite successful.
Applying to the CMA 9 only, please. And we have roughly, if I remember, 200 banks and 200 EMIs in this country. So we've got roughly 400 organizations with transactional accounts. Let's say we've still got then on average about another 50, it's about 450, 500 different transactional accounts. And we've mandated a customer experience on 9. Okay, just want to check I got the numbers right there.
But this is where the scheme or schedule comes in, right? It's like, if we're going to make this work, people are going to need to sign up to single sets of rules.
Well, you could mandate it.
You could do, yeah. But this is the point where it comes down to what role you want for a regulator versus industry.
Yeah.
And how involved you want a regulator to get. Because we don't think we're the best people to write a set of scheme rules. We're a regulator. We don't run payment schemes. And we need to make sure that the right people are driving these things forward.
I think it's a very good comment, Nat. Yeah. We have a question here, the sixth person back, and we'll come back to you next if there's time. I told you we'd run out. Sixth person back, name and company, please.
Hi there, my name is Arjun, and I work for a tech company called Points. Just touching on the piece of adoption, yes, you did touch on the user experience of it, but I was also curious to understand, especially from a retail standpoint, considering today we use our credit cards and we earn a lot of rewards on those credit card spends, does moving to pay by bank and not earning those rewards also make adoption harder?
Tell me what card you get. Most of them don't have rewards anymore. They got rid of this little thing called interchange. They made it very cheap for retailers.
Well, at least in North America you still do.
I would say from a bank perspective, if you have an account where you get rewards for your current account, your debit card, why would you not transfer that to pay by bank logic as well?
Look, I think that rewards could be a really good way to try and drive consumer take-up of open banking.
Yeah.
I don't think it's the key thing that is in this country stopping people, at least stopping retailers from switching over to it. I think there are some more fundamental issues, like the cost for low-value payments and the functionality of omni-channel in store. I think they're more fundamental, but I do think that rewards could be used to try and drive consumer uptake at some point.
Mm-hmm.
Thank you. Question here, second man, name and company.
Hi, I'm Pawan Kumar from Pisbo. My question, I think, is more from a retail point of view. Fraud, I understand the regulator standpoint. Fraud, even if you put the best rails on possible, there will be fraud. So you can't go to a 0% fraud situation. It's ideal, but it's not great. But from a retail point, let's say you start saving money by using open banking, right? Would you pass on this sweetener to the customers, saying, okay, as a cashback or a benefit? Not just rewards, but something like that. Maybe banks can also do that because they might save some cost by doing faster payments. And effectively, today in the UK, the PISP works on faster payments, which is already a scheme. So, what's your thought on that?
Yeah, we actually, can I maybe jump in
Yeah,
on this one quickly, right? Because we have quite a few merchants using either kind of single immediate payment journeys and the sweeping VRP journeys. And it is absolutely spot on. Like we see where we are implemented by the merchant as a test case. When this works, and merchants quickly realize this is really beneficial because when it converts really well, then it converts really well. And it's cheaper, so then they start incentivizing their users to switch and start using this payment method, and they absolutely pass these benefits to their customers. Now, on the other side, you asked about the banks. Is this possible? Yes, but I think this will be really much harder to demonstrate. It'll take time, right? Because banks are a bit more complex, and it's really difficult to understand. Like if you remove one thing, how does it affect the other one? So yeah, there is a scope to do this for banks as well. But yeah, retailers, 100%. This is exactly what's going to happen.
Yeah, and if I think about as a bank that we offer loads of loans, we're a large loan bank for the UK consumer market. A faster payment VRP, if we had that at the same sort of cost as what we have for our backs payments today, that would be really interesting, and we would really
we have
like
already
to adopt
seen
that.
actually one of the banks come out and say, if you allow us access to open banking, we'll give you, I think it was 20 or 25 basis points off your mortgage, because they felt that way they could get greater data, more understanding of the end user, and therefore could be more confident in the mortgage offer they were making. And I thought that was quite interesting. So to your point, they were using data access rather than cost of the payments bit to give them a discount. Is that?
Yeah, and we have our Know Your Money tool, so we're very much driven on leveraging our open banking partnerships to really make the most out of the data that customers and consumers can have access to, how they manage their money, and advise them on that a little bit more. I think that teamed with working on the commercial piece, though, would really add fuel to it from a bank perspective. I look at what I pay today for our backs payments for our loans customers versus what I'd pay if it was VRPs, our open banking partnership, our faster payment connectivity, and the cost of that as well. It's not really comparable as a price point.
So Hannah, we're expecting big merchant discounts every time I pay with my bank now going forward. I'm looking forward to all the merchants starting to give me some cash. I lost 500 quid when they got rid of the interchange. I used to get loads of cash back from my credit card company, and they said I was going to get it back from the merchant, so I haven't had a single check from a merchant yet.
Yeah, look, I don't have a huge amount to add, but yeah, I do think that retailers will start to and they do have the option to incentivize customers to use towards a particular payment type, and especially if the cost model doesn't change as it is, then definitely they will want to sway them for high value payments rather than low.
The side I've seen when I talk to merchants is this combining of loyalty and payments, especially with commercial people, where they are creating that Uber experience for their loyalty card type checkout. That because they know who they are, they come back regularly. It's that side where they'll incentivize them but also manage them. That's where I'm seeing the combination coming together, I think, in the future, not yet, but I'm seeing some of them getting very excited about.
And that's where I see that there's actually an exciting part of open banking that's kind of not yet been unlocked, but it is that kind of omni-channel. How do we bring the loyalty, everything together basically in one, a bit like you do in an e-commerce checkout, but you don't get that at the moment in store, and there is the potential there for open banking to bring that all together. They can't surcharge on certain payment types under the legislation, but they can incentivize.
Oh, there you have it from the BRC. Expect the incentives from the retailers on certain payment types, or the potential for potential to bring it all together. I think you'd agree. We've had a great panel. Thank you for the audience questions. And please stand on stage, because we've got our next, I believe, panel up again next. But Andrew's the chair, so he will take over. Thank you very much, and I'll hands together for the great panel. Thank you. If you leave your headsets just on the stage.
We do have another panel, but that is going to be after lunch. So lunch is outside at the tap and taste options in the exhibition hall. You will need to have a fob to pay. It will be collected at registration if you haven't already got one. If you could please leave your headphones here